Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms, such as our 21 SPY and ES mean reversion systems, which has closed out some amazing trades this week. Hopefully, some of you guys took that. Our subscribers certainly did. And of course, our KISS trend following systems. All right. Wild action today in the markets. A lot to discuss. The ES futures were down 100 points in the morning, and then they recovered quite a bit. Again, I'm going to discuss everything in detail, so let's go and get started with that. So again, this is a detailed technical analysis of the markets and our trading systems, and it's April 25th, 2024. This is our backend recorder for our standard web page format, which I'm going to start now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Thursday, April 25th newsletter. Wild action in the markets today, as you know. I'll get back to that. But anyway, this newsletter is divided into 6 major sections. First section, we're going to have our opening discussion. Then we're going to talk about some of the mechanical trading systems a bit. We're also going to then move into the general market analysis, where we'll look at some of the big cap tech stock earnings. We'll also look at the major indexes, the S&P and the other major indexes, the Dow, triple Qs, small IWM small caps. We'll look at a few indicators. We'll look at a few market sectors. We'll look at the US dollar, Bitcoin and crypto stocks, commodities, precious metals, GDX. We'll look at a few trade idea setups. I didn't add any new setups tonight. Again, as far as the market, again, as you know, coming into the weekend, we were quite oversold, especially if you watch my weekend newsletter. We were quite oversold. You could count 5 clear waves to the downside. The S&P 500 was in a perfect downtrend channel. So we were expecting a rally, some sort of oversold rally. Plus, we had a lot of our mean reversion systems had scaled into the pullback. Well, we got that rally for the first 2.5 days in the market until Wednesday morning. All right. Then yesterday, Facebook reported negative earnings, and market futures fell on that. And then, of course, this morning, you had weak economic data, such as the GDP. So we had a very strong gap down on the CAS indexes. The Dow Jones was down over 600 points in the morning. The S&P was down about 85 points from Wednesday's close, and we're down about 100 points off of Wednesday's highs. All right. And then we had a nice recovery bounce today, where the S&P was down only about 23 points. Again, it was still down for the day about 0.5%. Dow was down about 1%. NASDAQ lost 0.6%. Again, nice recoveries off those lows. For the week, the indexes are still up quite strongly, with the S&P 500 up 1.6%, NASDAQ up 2.3% for the week. Okay. And I'm going to go over a couple educational items here, guys, just to show you the wild action. And again, we're also really big on education here. So let's go ahead and get started with that. So the first image below, item number 2, here's a 15-minute chart of the S&P 500 cash. So again, this is what I was talking about. Coming into Monday, last Friday, we had clear 5 waves to the downside. Whenever you have 5 waves to the downside or upside, you always want to be watchful for a market reversal, okay? Because 5 waves is generally completing pattern. So we had 5 waves, we had this channel. We broke out of that channel on Monday morning, okay? Then we rallied up until Wednesday morning. We had 5 clear waves to the upside. You see this? 5 waves. This is important. My comments here. So we were looking for a pullback in the market, and then we had Facebook earnings on Wednesday. Futures and the cash market this morning looked horrid. Things looked very bad. But we were favoring a higher low. Why? Because you had 5 waves up, as I state here. This is important. Had you only had 3 waves up off of Friday's lows, then that would have argued for another low. But because we had 5 waves, there's a couple different ways to count this. One would, a bullish way would be this is wave one, and you're looking for a deep retracement, higher low wave two. The other thing which I favor though is 5 waves of wave A, a higher low is a wave B, which it looks like we put in, and then now we go up in wave C. Now, once that wave C ends, then I'm looking maybe for another decline in the market. But the point I'm trying to make to you guys is whenever you have 5 waves like this, that was indicative of a higher low. Price also pulled back into this demand zone where it found support. Now, after hours here today, remember yesterday we had Meta report earnings. Well, today we had Microsoft and Google. And of course, they knocked it out of the park. They're up strongly, and that has brought futures back up to essentially right around Wednesday's highs. Let's take a look at that. Image number 3. So here's ES futures on a couple different time frames, 6-hour time frame, 78-minute. So again, market, as you know, has been selling off since the beginning of April, stair-step fashion. You can see last Friday, ES bounced off this support zone, going back to late February, rallied up, we had a little DeMark 9. We were sold off yesterday, and then strongly overnight into this morning, we found some support here, higher low, and then we rallied after hours after those big cap tech earnings from Microsoft and Google, and you can see we're essentially back to Wednesday's highs now. So big recovery here. You can see at a nice clean downtrend line, which we, again, right after the market closed today on those futures popped strongly on those earnings. Okay. Next big resistance zone is up in here in this supply zone. Next. Image number 4. So coming into this week, quite a few of our mean reversion systems had started to scale into the market on that pullback that we've had in April. So we've had these mean reversion systems on, we had 3 of them that had triggered on the SPY ETF, 3 of them had triggered on ES futures. All of them closed out for nice winning trades. Okay. And sometimes these can be a little early at times. You can see the CCI divergence trade on the upper left entered last week, and then that was a bit early, and then it had a second entry. It didn't take a third, almost did, but it managed to close both entries, nice winning trades. You could see on the SPY, the trend pullback had 2 entries, one early last week, and then one last Friday, essentially at the lows. It was a good entry, nice trade, and you could see before that, about a week and a half ago, there was another trade that got in and got out. And on the QEBTS, same thing, nice trade, double entry. On ES, nice trades. Now I bring this up because on the bottom left, this was the one system that had closed out, the last system that closed out on Wednesday. Okay, it still made nice gains here, especially the second and obviously the third entry. The other 5 had closed out on Tuesday. This one closed out on Wednesday, just in time before that market pullback. Of course, the market is back to back above where these exited. But again, all very nice trades. Remember, these mean reversion systems, they're not trying to stay entire trends. They see a trade opportunity when things get too stretched. They get in, they get out, and they make money. They have around 90% winning trades. So congrats to everyone who took these trades. They were very nice trades. And as far as the futures here, guys, again, futures are not for everyone, but you don't have to trade futures. You could substitute these futures trades. You could substitute ETFs in place, such as SPY and SSO and UPRO, stuff like that. There is a major benefit to trading futures for tax benefit. It's the 60-40 rule, where you get to treat 60% of your capital gains as long-term and 40% as short-term. Whereas stocks, you have to hold them for a year or longer to get that. So that's the major benefit to ES futures and why a lot of the more wealthy folks trade futures over the ETFs. Okay, but again, if futures are not for you, you don't have to take these systems on the futures. You could do them on ETFs, substitute ETFs in place. Next, image number 5. So here's the trade tables for the mean reversion systems for SPY and ES this year for 2024. You can see SPY at the top. So the trades that all closed out this week are just above this horizontal line. Every one of them made money. And on ES futures here, It actually had more entries for ES. Really nice gains here. The only minor loser was the trend pullback first entry, which lost $66. But the second entry made $600 to $300. The third entry made $1,600. So nice trades. Again, congrats to everyone who followed them. The mean reversion systems are not always easy to follow because they're buying into sell-offs, pullbacks. They buy when it feels bad, all right? They play with your emotions. So they're not for everyone. Again, that's why we also have our KISS trend systems. So, but really we cover both bases of the market with our systems, the mean reversion and our KISS trend following systems. The KISS systems on the indexes went to cash over a week ago, so they've been in cash. All right, moving back to the general market. So item number 6 shows the index sector table, what transpired today and this week. Again, you can see the indexes did close down, but well off the lows. Okay, the S&P 500, like I said, was down about 85 points in the morning. Managed to close down only about 23. But still losses for the day. But the important thing is everything's up for the week still. The Dow is lagging, only up about 0.25%. S&P is up 1.6%. NASDAQ 100 is up 2.3%. As far as the 21 market sectors today, basically about 50-50 were up and down. All right. Communication services was the weakest. That contained some of those FANG stocks like Meta, as we know, got absolutely hammered. So again, kind of a mixed bag here of up and down on the sectors. Now for the week, all the sectors are up except for 2, communication services and metals and mining. Currencies, US dollar down 0.2%, down about 0.5% this week. Bitcoin has been rallying up with the market. It tends to follow the market, quite honestly. To me, it's not really a hedge for the market. It's more of a leveraged play on the market. Down slightly for the week. The crypto stocks have been kind of all over the place, but they've bounced off their lows. Commodities, the DBC index was up 0.5%. It's up 0.85% for the week. Crude oil up 0.9% today, up 1.6% for the week. Natural gas up. Again, it's up big for the week, up 13%. Copper up 1.8%. The only real commodities down today were agriculture, which has been in very overbought territory, and sugar. Precious metals, gold and silver up, both up about 0.6%. Still down pretty strongly for the week. GDX, the miners, came roaring back up 3.6%. That's a big move. Greatly outperforming gold, and it's actually up for the week. And as far as the bond market, the 10-year, 30-year, we're up today. Next. Item number 7 shows the economic news calendar. Again, yesterday we had Facebook earnings, which sent futures down. And this morning we had initial jobless claims, GDP. We had weak economic data showing increased inflation. Market didn't like that, and that's one reason futures really sold off. But then again, like I said, they recovered quite a bit by the afternoon. And tomorrow, Friday, we have personal incomes, spending, PCE, and core PCE and Michigan sentiment. And obviously we're in earnings season. Next, let's look at some of these stocks with the big earnings. So here's Meta. Again, Meta reported yesterday on Wednesday, was down strongly. In fact, on Wednesday after hours, it nearly filled that open gap at 400. It got very, very close. Okay, that was actually a good area to probably pick up a few shares. Today, obviously, well off those gap down lows, still down over 10.5% for today. Next, job number 9, here's Microsoft. Remember, I stated Microsoft would be reporting today after hours. They did, and that stock is strongly up. In fact, it's trading up here around 417 and after hours. Again, so it's not at new highs, but it's recovered a lot, and it had pulled back near this support area down here from the November highs. Next, job number 10, here's Google. They also reported today, and Google's trading up around 176 and after hours, so basically a new high. And Google was holding up really well anyway. Finally, job number 11, here's Amazon. Now, Amazon doesn't report until Tuesday, April 30th next week after the close. But it's actually trading up after hours, and it's trading up around 180. So right, essentially, yesterday's highs right there. You can see today price got into this demand zone. It bounced off of it. All right, guys. So crazy, volatile day, but you did have a trade buying opportunity today on that weakness. We were favoring a higher low. I know it would have been tough emotionally to do it, but it did play out. Next, let's jump to the index analysis, chart number 12. Here's the Dow, down, like I said, about 1% today. It's been weaker here lately than the others. Nice correction from the mid-March highs there, from the little double top and the channel break where symmetry was broken. Again, still a lot of work to do here. The next real demand zone is down here, where I'm showing around the 37,000 area. I think that could be tested over time, and then maybe the 200-day moving average. And my guess here is that we had an A move up. This was a B, higher low. Maybe we get another C wave, something like this. So we had a move A up, we got a B, higher low. Maybe we get a C move up, but because of the symmetry break, then maybe we come down again. That's my guess for now. Same on the other indexes, which we'll cover. Next. Chart number 13, moving on to the S&P 500 is the weekly chart. Still up 1.6% this week. Like I said, bounced so far off this 20-week moving average. Moving average ribbon's pinching on the weekly. Bigger long-term support is down here, which was previous resistance in 2021. Now potentially support on a bigger correction. Chart number 14, here's the daily chart of the S&P. Remember, this broke symmetry a few weeks back when it fell through this coil. Price pulled back more than 130 points off the highs. Remember, 130 points was previously the largest pullback in the uptrend. So you broke symmetry. We've had a good sell-off. We filled an open gap. We bounced off a little demand zone right here. So here's kind of my guess. That move up that we had earlier this week was a wave A. The deep retracement today is a wave B. Maybe we get a wave C up. But because of this symmetry break, I am looking for a lower high, guys. All right. So I am looking for a lower high, then maybe we come down again, and maybe we form a better bottom. Okay. Why is that? It's because, again, we broke symmetry. So let's take a look at that. So image number 15, here's my slide on symmetry. Like I stated, we broke symmetry, and generally when you break symmetry, you form a lower high. So that's why I think this move up could be a wave C, but form a lower high ultimately. Next, chart number 16, these inverse ETFs, SPXU, which I put out back in late March, early April, which provided an excellent trade. And honestly, coming into today, it still had a bull flag look. I mean, look at the volume patterns. Just looked really good. So honestly, this wasn't a bad thing to buy yesterday on that pullback. In fact, it still looks okay, honestly. But, maybe if that market does that ABC, maybe it pulls in a little more to these moving averages here. Maybe that'll be a good buy opportunity. Chart number 17, here's the daily KISS. Again, KISS system did its job. Remember, this went to cash last week at 50.82. It is in cash now. It's waiting for the next opportunity. That's what the KISS systems do. They're trend following. They're long only. They set these smart trailing stops, move them up to allow you to protect yourself and protect your gains. So right now it's in cash. Moving average ribbon, you can see, is now bearishly stacked. This is nowhere near going back long yet. Chart number 18, here's the 4 time frames. So again, you can see how we got very oversold, like I said, coming into Monday. Very wide moving average ribbons, various marks. We bounced up in Tuesday, Wednesday, found resistance around the ATRs here. Okay. Chart number 19, here's a half-day chart of the S&P. Remember, we filled that gap. We got into this demand zone where we bounced off of from Monday until Wednesday morning. Then we pulled back, higher low so far, and which we were favoring. Now we'll see if we can get another move up. Maybe a good area target for this potential wave C could be up around this 50-day moving average. And then I'm looking for maybe another decline. Next. Chart number 20, here's that 15-minute chart, which I already discussed above. And like I said, guys, educational thing. It was scary this morning. emotional on the big, 80, 85 point gap down in the market, on the cash market. Things look like death, but price had pulled into this demand zone. We were looking for a higher low because we had 5 waves up. That's the key. If we hadn't had 5 waves up here from Monday until Wednesday, then we wouldn't have favored a higher low. That's a key point. That's an example of the power of technical analysis. Okay. Anyway, after that 5 waves, you can see you had 3 waves down, which is what you'd expect. If this is a wave A, if that wave 5 was a wave A, this is likely a wave B, higher low, and then we move up in a C. Price right now after hours with the futures, S&P is trading up around back to Wednesday's highs now. Next. Chart 21, here's another 15-minute chart showing you the same thing. And you can see we retraced around just around that 61.8% today. And that's an important area because we blew through that with the futures. But the reason I'm showing you this chart, guys, this has the price by volume. And you can see here, you know how I mark this as a thin zone? You can see the candle here. There's essentially no consolidation. So if price got into this area, it would easily fill this. But I'm showing you that the price by volume shows that thin zone as well. You see how small that volume bar is? So it just confirms that that's a big old thin zone above. So tomorrow, if we gap up nicely, if we get above Wednesday's highs, I'd expect price at least to fill this gap, go up to that 51.10 area. Next. Chart 22 is a 5-minute chart showing the wild action today, the huge gap down. We quickly found support the first half an hour, then started chopping higher. You can see we didn't quite fill that open gap on the cash. Obviously, that's being filled here with the futures after hours. So as long as futures hold up, that should be filled right away tomorrow. Next, chart 23, here's the triple Qs. Again, that tight coil pattern a couple weeks ago, which broke to the downside, broke symmetry. Moving average ribbon turned bearishly stacked. We rallied up, formed a lower high there. We were expecting a higher low, which so far we have. And of course, with the futures after market, they're up nicely. So again, same basic pattern as the S&P, A, B, maybe get a C move up. A good area for this to potentially stall would be basically right around this area, right where you see these major moving averages and the lows here on these various candles. Next, chart 24, here's the KISS system. KISS system is, of course, went flat on the triple Qs last week. It is in cash. Chart 25, here's the weekly view of the Qs. So this shows that nested 1-2-1-2 count. And that last high, again, appears to be a wave 3 of 5. We've had the first initial decline. And we'll see if this ends up playing out as I've had this drawn for many months. So we've had initial pullback. We're getting a bounce here. Let's see if we form a lower high, wave B. So again, this would be essentially a zigzag A, B, C. You get a lower high B. Then you come all the way down again. Maybe find big support down in here as a wave 4. Then we get another rally to a new all-time high. So nothing's changed with our thoughts there. Chart 26, here's the triple Qs on the half-day chart. And we filled that one open gap. Nice move up this week. Higher low this morning. And then we'll see tomorrow if we can get up into these upper resistance areas around these moving averages. Chart 27, here's a 2-hour chart. Again, we got into this demand zone. Formed a lower high there on Wednesday, pulled back, bounced off of this area. Again, your bigger resistance now, tomorrow, if we get a nice gap up, would be up around this, anywhere from 432 to 436. Chart 28, here's a 15-minute chart of the Qs. Again, you have the same thing. You have the same wave counts here. You had 5 waves up. I don't have them marked here. We stalled at that resistance on Wednesday. You can see going back to April 16th. 3-wave pullback, ABC, into a demand zone where we bounced nicely, formed a higher low. And with futures tonight, price is likely up around this, back to this resistance area here. Next, chart 29, here's the 4 time frames with our custom indicators. Again, coming into this week, you can see on the half-day chart, look how wide that moving average ribbon was. Too wide. Think of that as a mean reversion as well. It was due for a snapback. You had a DeMark 9 there as well. We've rallied back. Still below the ATR. That's likely to be tested tomorrow. We're testing the ATR in the 130-minute. We're above it on the 78-minute. Chart 30, here's IWM small caps. Remember, they had that absolute textbook 5-wave ABCDE rising wedge with the MACD divergence. Price sold off into the demand zone, got pretty close to the 200-day moving average, but found support there. That was a good area to take along. And otherwise, very short term, the pattern's kind of similar to the others. Chart 31, IWM in the 2-hour. On the weekend, I showed this falling wedge into this big support area, and it gave a nice trade. Now, the trade stalled at this initial resistance up here. You see that? Pulled back, but formed a higher low, which we're looking for. Now we'll see tomorrow's move. We get up into this area. Note there's also an open gap up here around the 205 area that's unfilled. Chart 32, here's the 60-minute view of IWM, shows you the same thing. Here I added some fibs. The low this morning was just slightly exceeded the 61.8 fib. It's now testing a little downtrend line here. And the leveraged way to play it was TNA. That's the triple leveraged ETF. Again, that triggered wider way on Monday. Nice move. Next. Moving on to some indicators, here's the VIX. So the VIX has been melting down. Last Friday had that big black candle, which was outside the Bollinger Bands, but closed back inside. So to me, and that was options expiration, that was a pretty good sign that the market was going to have that oversold rally earlier this week, which it has, and the VIX has continued melting down. Chart 35, here's our NYSI 9 EMA crossover system. Remember, this gave a confirmed short trigger back in early April, which has provided a nice trade. Now, one thing I commented today is, despite the rally this week, this is barely budged at all. So this is nowhere near close to crossing back for a buy signal. So that, not surprised there. So it's still on a short. Chart 36, here's the very neat indicator. It's the percentage of stocks in the S&P 500 that are trading above their 20-day EMA. So one thing I postulated on the weekend was, this was quite oversold around the 10% area. But a lot of these past major bottoms, you had a 1-2 effect where you had your initial low, move up, and then down. Initial low, move up, back down. Number 2, same here, initial low, around 10%. Actually, this was around 5%. Rallied up, came all the way down, and number 2, which ended up being the better low, trade low. So that's kind of what I'm postulating here. We had that initial low. It popped up this week. Maybe eventually this comes down again for a number 2, and that's your better low. That would certainly fit with the wave count I presented, where the S&P is unfolding in this ABC. The wave C should go up, but then ultimately come down again. Next. Moving on to the bond market, chart 37, high yield corporate. And remember, this found support around that demand zone, bounced up, stalled around the 20, 50-day moving averages here, up to date, or bounced back off the lows today. Chart 38, here's the 10-year treasury yield, up once again, up 1.16% today, still in this uptrend channel. Chart 39, here's TLT 20-year bonds, again, still in the same old downtrend channel. Chart 40, here's the yield curve. It continues to push up about 1.5% this week so far. We want to keep an eye on this because it's been inverted for over 500 days. And when it goes back uninverted, so when it goes back above 1 here, the ratio, that's typically when your official recessions start. And I firmly believe we're going to get that. Okay. Chart 41, this chart from Game of Trades shows you the yield curve as well, but back in the 1920s, as he shows, yield curve has been inverted for over 500 days now. Past 3 times it was inverted that long, 2007-8, 1973-74, 1927-29. All those had 50% market corrections. Whether we see that now or not, this time whenever the yield curve goes back, who knows? But it is just something to be cognizant of. Moving to a few market sectors, chart 42. Here's XLK Technology. Again, bounced off that 38% fib from Friday's lows and the open gap. Everything matched up. You had two big technical events lining there. We rallied up, stalling at the 9 EMA, pulling back. Now again, with futures tonight, likely to see this pop up. Bigger resistance is obviously up here, this previous breakdown from the descending triangle. That's now resistance, and the declining 20-day moving average. Chart 43, XBI Biotech, rallied up off the 200-day moving average, stalled at the 9 EMA, coming down again. Now this next low here is setting up some RSI divergence. So you may want to keep an eye on this. There's also a demand zone down here. Chart 44, XLE Energy has been bouncing up all week, as you know, still not back to the highs. Chart 45, Oil Services, still holding support of the 50 and 200-day moving averages. To me, nice pullback off that resistance from early April. To me, I thought that was a good area to at least have a new starter long position in some of the energy names. Next, chart 46, US dollar, down today, 0.25%. Kind of still has this little flag look to it, but it has pulled back from that resistance zone. Chart 47, Japanese yen. Remember, this showed this descending triangle pattern a few weeks back, which broke to the downside, continues lower. Japan has real problems, guys, especially with their birth rate. It's extreme, crazy low. It's like none of the young people are interested in sex there, basically, or at least having kids. Next. Chart 48, here's Bitcoin. Bitcoin did hold that big support area, rallied up so far as a lower high, though. Again, to me, this is kind of moving with the market at the moment. One thing, guys, this is a big self-support around this 60,000 area. So in the future, if this comes down and breaks this, right here, this is essentially a very thin zone and no support. You can see it confirmed on the price by volume. So if price eventually comes down and breaks this, I think Bitcoin quickly falls at least to this next demand zone, if not the 200-day moving average. Remember, the 200-day moving average is sloping up. So by the time you get down to there, it'll likely be caught up with that. Chart 49, there's the 4-hour chart of Bitcoin. Shows you the same pattern as well. Here I added a downtrend line to monitor if you can get above that. Chart 50, CLSK, one of the Bitcoin stocks. This was showing relative strength after breaking out a little pattern. Gave a nice trade, pull back, finding some support around these moving averages. Kind of has a flag look to it here, bull flag look. Moving on to commodities, chart 51, DBC up 0.85% for the week. Remember, it's still longer term in a coil here. I do think eventually it's going to break through that coil. Chart 52, crude oil. I added this channel last night, so it's been holding this channel line. Remember, a few weeks ago it pulled back off that supply zone, but this is your big support here is the channel. Chart 53, USO, the proxy for crude oil. It's an ETF. Obviously, it has the same pattern. Chart 54, natural gas, up today a little bit. Remember, we've been showing this falling wedge. You have some active divergence here. Still in the wedge pattern, so we're still monitoring this thing. Chart 55, natural gas on the monthly. Chart goes back to 1995. Like I said, natural gas, I'm interested in it here for maybe a pretty decent bottom trade because, it is at basically a 1990. Basically, it is at almost a 30-year low now. Chart 56, copper, up about 1% this week so far. Nice move out of that coil pattern from a couple months ago. Chart 57, DBA, down today, basically an inside day from yesterday. We have this divergence that's building, but price still remains very strong. Again, just keep those stops pretty tight. I would also check where the stop is on the KISS system. The KISS system went long back here in February, so the KISS system has absolutely nailed that. Chart 58, there's the weekly chart. I just love this chart. Absolute beautiful cup and handle. Again, this is one reason why inflation is so high, especially at the grocery stores. Here's the monthly chart. Again, nice long-term move out of that 2020 lows. There is a demand zone right in here that we're at right now, so area that we could struggle a bit. Moving on to the precious metals, chart 60, here's gold. Now this is the weekly chart. Gold's still down about 3% for the week. Again, it had a major long-term breakout, as you know, back in February. Chart 61, here's the daily chart of gold, up slightly today. Stocks are outperforming here a bit, so that's a positive for now. Again, we either have a major high in gold here as a wave C, or maybe that was a wave 3. This is a wave 4 pullback because there was no MACD divergence. That's why I'm still open to this wave 4. Chart 62, there's the 2-hour view of GLD. Now, this does suggest a completed count a couple weeks ago is that wave 5 of 5. We got that lower high. Chart 63, there's the monthly chart again, guys. Don't get me wrong. Even if they have a better high here, long term, they've broken out of a major pattern, big cup and handle, appears to be in a wave 3. So, if gold wants to consolidate here for a month or two, that's fine to me. Long term, I think it's going much higher. I think nice pullbacks are major buying opportunities. Chart 64, silver. Again, nice breakout from the ascending triangle. Remember, that previous breakout is big support. So if price ever gets close to that, that's a good area to start scaling back into silver. Because to me, silver's had a major breakout. Here's the weekly chart of silver. SLV ETF, you had a major breakout from this bullish coil pattern. So again, to me, pullbacks are buying opportunities. And if you're long-term, I think you could probably just stay in it. Depends on what your time frame is, if you're short-term trader or longer term. But I do like this longer term. I think it goes much higher over time. Here's the monthly chart. Like I said, so far, well off those highs, pulling back off the 2021 highs, but still out of the coil, this 4-year coil. I do think over time, it'll rally up into these upper 40s. Some individual names. Here's AG, Majestic Silver. I showed this a couple months ago as a falling wedge on the weekly time frame with this MACD divergence. Beautiful pattern, A, B, C, D, E. Broke out. I said a nice pullback would be a buying opportunity. So did any of you buy this on this nice pullback? To me, that looks bullish. Another one, here's WPM, a little silver stock weekly. This is one I was also talking about. And this one's breaking out to new highs. Chart 69, there's the daily chart of WPM. Had a nice tight coil recently, which we're breaking out of. Chart 70, here's GDX. This is the weekly chart, up 0.75% for the week, bouncing off that 9-week EMA. You can see resistance areas above. I do believe those will eventually be taken out. Chart 71, here's the daily chart of GDX. One way to, the bullish look on this would be that this is simply at a 3-wave ABC pullback, and it's going to go to a new high again here. Again, we had our buy trigger back here on March 1st on this channel break, confirmed also by the trendline breaks in the GDX-GLD ratio and RSI trendline break. Chart 72, here's the 2-hour chart Steve showed last night, this channel. Now we broke the channel today, so that's a positive as well. Next, chart 73, our GDX trading system, BPGD and Marinko system. Remember, this gave a buy signal back here on March 1st. Amazing buy signal. It has now moved up to 82%. So it's an overbought territory. Again, it hasn't given a sell signal yet, but it is up here, guys. Let's take a look at some other individual stocks. Here's Newmont. Newmont, big day. Basically, they had a good earnings. So they had good earnings. They gapped out of this bull flag pattern. This is the largest component of GDX. Chart 75, here's the weekly chart. Again, found support this year at the 2020 lows. And this weekly chart looks pretty good. You can see the ratio breaking as well. Chart 76, here's RGLD, Royal Gold, breaking out of a flag pattern here now today. Looks good. Here's the weekly chart. Kind of has a bull flag look to it here on the weekly. And chart 78, GOLD, Barrick Gold. So basically it pulled back to this neckline, which became support. All right, finally, let's move on. Look at some other things. Here's Tesla. As you know, Tesla was selling off, but it's bounced back nicely this week, as you can see. And it was up today. It was up today in the morning when the S&P was down 85 points. Driver 80, here's AMD, which had a heck of a correction, but it's pulled back to the support area. It's trying to bounce. This one has earnings next Tuesday, April 30th. This could be getting to be a low-risk buy down here. Let's take a look at the next chart. So chart 81, here's the KISS system directly from the website. You can see the KISS system on AMD. It caught a nice trade from last November all the way until March. Had an excellent trade there, been in cash, and it went right back long today with a stop at 145. So just a bar off the lows, there's also the Mark 9 there. So the KISS system went right back long on AMD today. Maybe that bodes well for it. Some other things, here's NVIDIA, nice bounce today. But again, it's going to struggle here at the 50 and 20-day moving averages. And of course, you have a downtrend line. You know, did find support around that 38% fib, but you got resistance up here. Driver 83, ENPH. This was a short idea I put out last week. And if you shorted it, I put out yesterday. If you shorted it yesterday, hope you took profits in a demand zone. You can see it went down into there and bounced back. Again, guys, I didn't really add any new ideas here. So here's Adobe. Steve had it on our watch list last night as a wedge. It still looks okay here. This would be the measured move if it were to break out. Driver 85, LPG, one from Steve on Monday, still looks okay if it can break through there. Driver 86, FUTO. This is one I put out yesterday. It's a weekly chart. I really love this coil on the weekly. On a breakout, this could be a longer term swing play. Driver 87, SPG. I put it on the watch list on the weekend as a short. Needs to lose this 139 area. If it does, the next target would be around this 200-day moving average. And Driver 88, here's Apple. So Apple's been bouncing here a little bit. You have some positive divergence here. It's still in a nice downtrend channel. Earnings is May 2nd, so we still have a little ways for that. Otherwise, again, like I said, it's still in a strong downtrend here. All right, guys, that'll do it. Like I said, futures are up nicely. ES futures are up 38 points right now. NQ futures are up 200 points. So pretty big moves in futures. And we'll see if that holds in the morning. I wouldn't be surprised if it does. Have a wonderful rest of your Thursday evening. Thank you for all your support. On YouTube, please like, subscribe, comment. I'd like to see more comments on the YouTube channels. That helps the algorithm. And again, have a great evening. Have a great week.